I mean, what a time for your business. You got the economy reopened. You got the ISM manufacturing number near a 4-decade high. And yet all these headlines about supply chain and labor availability, and now this PPI number running hot today. I wonder how you're processing it.
Yeah, look, supply chain, PPI, it's always something. This is how they pay managers to manage over this. This is a great time. Really, I think, people say the stock's up. I'm saying, if they told me the stock was going to be up, I'd say no kidding, Sherlock. We showed great resilience, a V-type recovery where our people, this kind of industry, the essential industry, shocked at first, accommodated it to it, and came up. So demonstrating the kind of resilience that our industry was that allowed us to pay dividends every quarter from 1939, never reducing it. And the other thing about it is, generally, what holds our growth is our capability to take advantage, to sell more through those vans. It's like a knothole. And in the third and fourth quarter, we demonstrated that through the use of social media, with some of those assisting that direct sales, we expanded that. And if you think about it, people are going to drive cars more after the pandemic than before because they don't like shared transportation. So things are looking up, and our stock actually looks good. I'm looking for more because our multiples still don't compare to our less than our comparables.
Right. So if the headache for you is not necessarily a production supply chain issue or a cost issue or a labor issue, is it a tax issue? Are you worried about the conversation that's heated up this week?
I mean, the thing is that the taxes, I think you had Jay Timmons on yesterday. He knows that, he was talking about taxes. We're happy about infrastructure. In fact, the idea about infrastructure, we somewhat like a piece of the bill because it talks about upskilling the American workforce. And we've said for a long time that these essential workers are the lifeblood of our business, of our nation. They've kept us alive, kept us from disintegrating during this COVID crisis. And the idea of training them and getting more into that sector will reduce inequality and make Americans prosper. But corporate taxes asymmetrically hit manufacturing. If you think about it, manufacturing, Snap-on isn't like this because we're both a manufacturer and a distributor. So we can price. That's one of the things we can do. But if you're a manufacturer, you're competing with offshore people who don't have the same cost base. So basically, you're under, if your cost base goes up and your tax rate now is not competitive with the OECD, then that's a difficulty. I love it when you're on programs and people are on programs and they say, hey, manufacturers, companies got to pay their fair share. What's the definition of fair share? I would say the definition is above the OECD, and that's where it is now. And the whole idea, what's going to happen is distribution will be able to price because they have no offshore competition. So taxing corporations asymmetrically burdens manufacturers. I think Jay said 1 million jobs are going to be lost. I don't know if that number, I think that's his number. But look, what's going to happen is you're going to see a shift of jobs from those high-paying jobs to service jobs. You like service jobs? Vote for tax increases for corporations.
Nick, you mentioned that, it's intuitive. People are going to drive more once they get out and about and vaccinated. What else in terms of the bigger picture factors are important for your business? You're seeing new car sales actually pretty much click toward a record annual pace, but also used car pricing surge. So obviously tremendous demand for vehicles. How does that translate into either miles driven or the need for service?
Look, new car sales don't make too much difference to us. What makes a difference is change in the car park. So what's happening is, they're changing the technologies. This has kept going, and it's driving our businesses. So this will work pretty well. I think, people worry about electric vehicles. If the president tomorrow said we're going to go to electric vehicles, I'm going to mandate 50% electric vehicles, I would kiss him because it would drive a lot of change for our business. We would sell different tools at the same time we were selling the internal combustion engines. And so that is really what drives our businesses forward. I was out yesterday with a franchisee on his van, talking to him about people in the field. I was at a factory in Louisville talking to people. And the interesting thing about the economy is it's a sort of a two-tier economy. The people of work are primed and pumped to go forward. And I think this is useful to hear, is that they are confident because they've been at their jobs every day. And they got shocked at first, but they accommodated. They learned how to accommodate the virus. So they're not going to, in the words of the WHO, they're not going to get shocked again. And so they're confident that whatever happens, spikes or not, things are going to go forward. And then they're looking at this and saying, hey, things are only getting better. It's like they're watching Brady drive for a touchdown down the field. That's what they're seeing. So they have this positive view. So I think at the grassroots level, the economy is going to keep going. Bigger companies are a little more troubled by things like taxes and inflation. So you kind of have that two-tier.
Shepard Smith here. Thanks for watching CNBC on YouTube.